Good morning, it's Monday the 21st of August 2023 and this is an early trade plan video purely because I'm taking the kids out today, school holidays, and I've worked so hard I've barely spent time with them, so I said I'll go down to our local town where we're going to do some crabbing and hopefully go into the arcades, let them have some fun for a bit. A place called Swanage, which is right on the south coast of England, and a lovely little fishing town. So I'm looking forward to going. We're going in the next few minutes, so I thought I'd just get a quick video out in case I'm not back here for the Open. It's unlikely I'll be here for the Open, so but I will be back, and probably soon after, maybe within a few hours of the Open. But I'll definitely be around for the pre-market, the power hour a bit later as well, so probably hours before then. So looking at the chart at the moment, I've got the hourly time frame open for the MES. Just a quick look at news. No major news today. We've got bill auctions 3 and 6 month, and that's not till 11:30, but they're considered 1 out of 3. Nothing of importance. Nothing of importance tomorrow. The only important news items this week is durable goods on Thursday and Powell's speech on Friday. So these are the only real things to keep an eye on. We have got plenty of news, but a few 2s out of 3s, but definitely nothing today. Tomorrow we've got a couple of things as well. Right, going back to the MES, let's look at the daily quickly. We start off on the daily. So on the daily we put in this bottom tail candle. Looks like a nice reversal candle. However, there's no real ending volume here, so I'm not sure whether it's a reversal candle. Well, it's definitely a reversal candle, but I don't think it's a significant reversal candle. Potentially we might be looking at a bit of a pullback. It's only average volume. If we had ending volume, we'd see something. We'd see a big volume candle like that, where the buyers and sellers were battling that out, and the buyers won it in this case. But nothing. So potentially we're looking for a little bit of a pullback, and looking at reduced volume over the next few days if we do pull back. So that's something to keep an eye on. Potentially, if we are pulling back, then we've got this area, this shaded in red, as a potential resistance and area of supply, and it's also the 8 moving average, which we've not closed above since, is that the 1st of August? Yeah, 1st of August last time we closed it, and that's what started our downward spiral. So we've got a little bit more room until we do get there. So I'm not going to go with any bias today, but potentially we're getting ready for a bit of a pullback. Let's just do one because we are fairly far away from the 8, the 20 and the 50, and if you look at the daily, every time we got far away from the 8 we pulled back, far away from the 8 we pulled back, far away, pulled back, and then we kind of didn't get too far, pulled back, we started getting a bit extended, pulled back, and then we just hovered around before we cracked down through it. We have crossed the 8, has crossed the 20 as well on the daily, and I think that's pretty significant because whenever we cross we see a bit of a trend. Like the last time we crossed was down here, was that back in March, and we saw this big push up. The last time we crossed in a downward way was here, and that was middle of February, and we saw February through to March, we saw over a month, about a month's worth of bearishness before we cross back over. And again, we generally don't have anything which lasts more or less than a month. That's a month's worth. We crossed there. Okay, December the 15th, January 10th, so about a month. We crossed there. August the 26th. Right through to October, so that's a couple of months. There's another short one here, 8th of Jan, and we crossed back over on the 18th of Jan, so that's a shorter month there. So, but we saw some big moves as well, which is different this time. We're not seeing big moves, they're just very small, almost like grinding moves, so nothing significant. So I think even though we don't know what the market's doing, potentially we're looking at a little bit of a pullback. We're due to move back up to the 8 moving average at some point, so maybe this is what we're looking at now. So let's go into the hourly and just look at our levels. So interestingly, today in the pre-market, bear in mind it's 4 AM Eastern time at the moment, we've just closed on the hourly above the 50 moving average, and that's another reason why potentially we may be looking for a bit of a pullback. So an area I'll be watching, and so going back to that, look at this nice head and shoulders pattern. Got shoulder here, head here, and this shoulder here. And the funny thing was, I recorded this video yesterday knowing that I was going to go off today, and I didn't release it because I just wanted to see what today was going. And yesterday in the video I said we got a potential head and shoulders pattern setting up, with this being the neckline, and it looks like almost exactly that. I think yesterday I was looking at the video about, where was it? It would have been there. So just before the market opened. So I was here watching the video, and I said potentially we've got this, a right hand shoulder could be setting up, and that's exactly what's happened today. So I love this is one of my favourite patterns, head and shoulder patterns. It's something I can see before it happens, and I'm starting to get used to it. I don't really take my plays off of it, but I just like seeing them set up because potentially it's showing me that there's a bit of a reversal happening. So based on what we're seeing right now, we've got this neckline area, we've got the 50, we've closed above the 50, and I'm not going to have a bias today whether we're going up or down. I think maybe we're going to see a bit of a pullback, but play the day as it is. So I'm just going to give you some higher risk and lower risk levels. So for rejections to continue this downward trend, if I zoom out, you can see that we're in this, still in a downtrend on the hourly. We started it up here, this nice double top with lower high, and then lower low, lower high, lower low, and we've been putting in a series of lower highs, lower lows, and potentially now we're seeing a bit of a reversal. So with that in mind, we've got this higher, and this is probably for this week, not today, we've got this higher probability rejection area at 4480 through to 4500. It's a big area, and as we get closer in the next few days we can look at it a bit more closely, but that's an area we're potentially watching for rejection up here. And the reason for that is because we've come into it a few times. So we've rejected it there, we punched through, rejected it, and didn't quite get through, and then we came back down, and then what was the ceiling became the floor. It's in zones, so it's not a precise line in the sand, it's just a zone. And then we put in this extra layer, this extra level here as well. Come back down, we're still playing this area, and then we pushed back up, and then we took this rejection off the 200 like we did there, and then we came down with hardly any resistance through that area. We didn't even come back to retest it. In fact, one of my plays last week was a break and retest of this area, and that's exactly what happened. Look at that, it came down, had a double top off of this area before it pushed down as well. So this area is proven to be an area of support and now resistance. So this is the area I'm going to be watching for potential bounce. And we've got this 200 moving average as well. And I'm a believer that in the stock market, history likes to repeat itself until it doesn't. And we had a big bounce off it there, big bounce, rejection off it there, rejection off it there. Potentially if we get up to the 200 again, we may be looking for another big rejection. It could coincide with that level or that level as well. So that will add to the probability of it rejecting. So let's give you some numbers. Higher probability will definitely be 4491 area and 4470 area, these two areas. Obviously we can look at 4440 as well as a potential area because we've got bottoms here and tops here. So these are higher probability, higher risk rejection area. In my video yesterday I said this was going to be a high risk rejection, but we've already gone through that now, hence why it's high risk, because you don't know, but it could be a break and retest, which I also discussed. I'll come back to bounces in a minute. So we're going to have to go with this area now as a higher risk rejection, 44.10 to 44.20, and I won't say it's real high risk, but you need to look at it with confirmation. So we're looking for higher volume on a rejection candle. So we're looking for a candle that looks a bit like that, and a volume bar showing ending volume as well, which is above the average volume. And then even then, with confirmation, you look for a push below that candle as well. So you maybe have something that looks a bit like that, and then taking that one with your stop loss just up here, or in a meaningful area. So your stop loss could be that pivot, or it could be the 200 if we get up there. I'll do a video about meaningful areas shortly, because when I say meaningful, my idea of a stop loss is not quite everyone's idea. A lot of people like to use a monetary value. For example, I want to stop out by $50 or $100, that's my loss. But I don't see it like that. I said, why would you want to stop out by $50 and you put your stop loss just there? You lose 50, but if you put your stop loss just there and you lose 55, but it never actually stops you out, and then you see you move down, then to me that's a meaningful stop. That's just a monetary stop. That's a stop based on fear. This is a stop based on I would say not fear, but it's going to be a stop based on it being meaningful and that you're in full control of your trade at that point. So, but that's how I see it. A lot of people see it differently to that. So that's my rejection areas. Looking at bounces, one I just discussed now is break and retest, higher risk because we're quite close to it. So if we pull back down to probably not too far where we are now, this area, maybe touch the 50 again, and we could see another bounce up. So high risk bounces to break and retest of 43.90 to 43.90.50. We've got the 4400 level. That's a very high risk rejection, but if we're grinding through, it could be a break and retest area again. And then higher risk bounces, we are quite close to at the moment, but potentially this right hand shoulder pattern, inverse head and shoulders pattern. So we could see a bit of a bounce. We come back down to that area, and I've previously got it as a level of supply as well. So if I go back a few months, you'll see that there's other areas which rely on this, hence why we've got the shoulder pattern held up on that in that area. So higher risk bounce here, and then lower probability bounce would be this here. So if we come back down, we could potentially see a double bottom, and if we do get down here, probably what I want to do is layer into my position with some starter positions. So rather than go all in as I get to 43.50, I want to just go in with a small size position just before I enter this area, and then maybe another position there, start position, another start position there. So as we're coming down, I take 1, 2, 3 positions, and then my stop would be there just below. Again, it's a meaningful stop, and if I go back, it's probably, these areas are great what I highlight in green because they're there for a reason. It lets me know it's a higher probability area where we've seen lots of volume and action previously, and it's probably a pivot from a few months ago, a major pivot. So I'm happy to put my stop just below the green zone, which is a demand zone, and then I only stop out. That one will be a full size stop, that will be a half size stop, and this position here will be a very small, not even a quarter or a third of a stop. So overall my entire stop will be less than 1R if you're looking at our risk to reward ratios. If I were to go full size here at 43.50, say I take 4 starter positions and I buy my full set of 4 there, it could bounce, but if it comes through, that'll be a full 1R stop. Whereas by taking a starter position there, start position there, start position there, and then maybe another start position as it comes out of the zone or it comes back and retests the zone, then it's very unlikely to get a full 1R stop. And that's my way of managing risk. So I may not have my risk set at a monetary value, but I do manage it in other ways where I won't be taking a full size position as I get to this area. If I get a start position and it immediately bounces, it stops my FOMO as well, because it means I'm in, even though it's a quarter of my normal size, and it's not like me having a stop order, a buy order here, and it just gets close, and then the rest of the day I'm watching it go up and up and up. So by using the starter position system, it lets me manage my trade better. My stop could be there, and it also lets me get into a trade with minimal risk. And if we do see it come down, tag me into this order, come back up, then there's always add positions on the retest before it comes up, or as it pulls back, take an add there. So I'm looking for adds on the way up as well, and I'm basically looking to come in. I want to buy the dip and then sell the rip, buy the dip, sell the rip, and here we've got a bit of sideways, buy the dip, sell the rip. So that's the idea, that's how that. And so even if I do get a start position and I've only got one quarter of my full size position, then looking for adds will also enhance that trade as well. And obviously if I've got a full size position and I'm looking for adds, then it's a brilliant trade, and that's a great trade. Right, I digress slightly. So this is basically, I'm going to mark up my high and low probability bounces. So this will be a higher probability here, lower probability bounce. So 43, 50, higher probability. 43, 75 is lower probability, higher risk, but with confirmation. So basically looking for confirmation, maybe a break or a retest back up. And then my top two rejection areas, 44.40 is a higher probability, again with confirmation, and maybe the 200, 44.67 to 44.70, around the 200 there will be a higher probability as well. And if we do push through there, we've got 44.91 to 4500 as a higher probability as well. And that's it really for MES. So that if you trade ES or MES, it's exactly the same chart, exactly the same values. One thing I'd want to bear in mind, if we get to 4400, that could be a rejection area. But watching the SPX, we also got 4400 on the SPX to watch out for as well. So if the SPX gets to 4400 before the ES, then it might be worth just looking to take a start position. But if the MES gets there first, then I would just wait for confirmation, because the SPX, if once that touches 4400, we might see it reject, and obviously the MES may not quite be at that. They are, I think it's about $10 difference, so roughly when I last looked. So looking at SPY, we're in the daily at the moment on SPY. So we've got a little bit of unfinished business. We didn't quite get down to this pivot here, so potentially we might see it pull back. But again, like the ES, we could be looking for a bit of a pullback as well. Watching volume, this is interesting. Increasing volume as we're selling off, but we've yet to get a higher volume spike to show ending volume, which is why potentially we may be looking at a pullback rather than ending volume. So if we start pulling back over the next few days, and we see volume which is declining, so getting smaller, then that's showing that we're pulling back and there's no interest from the buyers. It's weak buying, and we could potentially look for another breakdown. So that's what we're watching for. So this is a great pattern here. Increasing volume as we're selling off, decreasing volume as we're pulling back. We may not get this candle, so let's just, can I erase that one? No. We may just start seeing smaller volume bars now as we're pulling back. A bit like if you look at here, so we sold off here, couple of volume, and then we had increasing volume here. So we had increasing volume on here as we were just starting to push down. You know, we're selling down a little bit, and then we had declining volume on these two candles, which is this 2-day pullback, and then we had increasing volume as we sold back down again, and potentially today we might see lesser volume, and tomorrow lesser volume as we start pulling back again. So it's you can't really, you have to be subjective when you look at the volumes, because you can't just say, oh, that volume, that's increasing, that's decreasing. You just need to see. What I'm looking for is if volume's going above the average, then we're getting an increase in buying or selling. And if it's below the average, then that looks like there's not much interest, or it's just steady volume. It might be average volume, but we could just be sitting in a trend going up for weeks. And then in theory, at the end of that trend, we get a candle that looks a bit like that, and then we should also get a big reversal or a big ending volume candle as well. So that will signify that we're getting to the end. We may not even be at the end. We may just see a few more days of selling, and then we might even just see a reversal then, and then before we move back down. So ending volume is what we're watching for, and we haven't seen that yet. So SPY in the hourly. Okay, so right now we're coming into, we've got the supply zone. Where's that come from? From here. So right now we're potentially seeing a little bit of resistance area. So we've got this area here, which is the last time we touched this area. Other than when we just broke through it, we saw a big push up, and now we could be coming down through it, pushing up. We could just be retesting it for a push back down again. So potentially looking for rejection around this area. So that area, let's just mark it with one of these as well. Get that one. Top of that area, and that should coincide with the tops and bottoms. Yeah, so if you look here, we've got tops of candles, tops of candles, tops of candles, bottoms of candles, bottoms of candles. So potential rejection around about this area. So 438 to 439 for potential higher risk rejection today, this area here. 440.50 is a higher probability rejection, but with confirmation. And this is now a supply, and then we're looking around 443 to 445 as a higher probability rejection area, and obviously we get back up here and we've got a higher probability as well. And for bounces, 432 is an area, demand area, is a higher risk, is a lower risk bounce area, and we could also, we've got this shoulder pattern, head and shoulder pattern. We could potentially be looking at a bounce here and there as well. So 443 is a higher probability bounce. 435 to 436 is a higher risk bounce. So Qs doing the same. So head and shoulders pattern coming in, looking big push up today as well. So we could be looking for potential rejection at this area, 362 to 363, and then higher probability up in this area, 370, 64. Again, these levels I've not had to change for a while now, for weeks, so all still quite valid. NQs, that's a nice defined head and shoulders pattern, inverse one. So our neckline potentially is there. So we've broken through the neckline. Rejection at 14,863, and then potentially this area here, and we've got this major area, so probably 15,000 to 15,050 exactly. And then lastly oil. Look at that level. So right off the 200 we rejected it, come back up, retested it. Potentially we could be seeing a push back down again. So 81.50 as a rejection area, 81.35 where we are now, and obviously that's bottoms of candles, top of this candle here, and we didn't quite get there, and that's the last time we was up in that area. This moving average as well is starting to curve back around, potentially showing that we're changing trend. We are still in a daily uptrend. Are we in a daily uptrend? No, not quite. We're not really in a downtrend until we break this neckline. So we've got this head and shoulders pattern. potentially we're looking at a head and shoulders pattern here setting up as well. This could be the right hand shoulder forming right now as we speak. And if we break down through this area at 78.70, then potentially we're looking at a downtrend in the daily. But this lovely head and shoulders pattern is potentially setting up quite well. Okay, so that's pretty much it really. Let's go back to the hourly on oil. So this, I would say this is a higher probability rejection area because it's off the 200 and it's at a previous resistance area. 81.35 to 81.50. Another higher probability area would be 82.50, and obviously we've got the tops as well. And then for bounces, if we come back down to this area 80.14, we could see a little bit of a bounce, but then we should be watching 78.70. Right, that's me done. I'm off now, and I will be back a bit later on. Hopefully you have a good day, and I will speak to some of you soon. Thank you, take care.